One of the questions I'm often asked is, why do I follow the futures market for options? And the question's a little bit broad, and I'll touch on a little bit of what I think the question is asking. And the first part, when I think about it, is that oftentimes I'm looking at the ES futures. And for some of the times when I'm trading, and specifically kind of day trading, I am often looking at the futures market to see what kind of bias is in the current market and for that day. So in one of the other training tutorials, I showed you and taught you about the up volume versus down volume on the ES futures, and the other things to look for is the ticks, and I'm using that to help me look for potential trading opportunities with options. Now, with the weekly options, I'm not looking to get long a weekly option if the market is going lower. And when I mean the market is I'm looking at the futures. Now, if the futures are showing a bias of a lower day or a bearish day, it doesn't really make sense to get long a weekly option for a trade, because I'm using the weekly options for a day trade, as to looking for put activity, names that I see that are having put buyers in the weekly options make more sense for the day for a potential breakdown. And I'm using the bias of the futures market and the ES futures market specifically, or the NASDAQ, to give me that confirmation and the confidence to put on the best trade possible. So we don't want to go the other way. The other reason as well that you would want to look into the futures market is that options are always a precursor of future price movement. So a lot of times you're going to see the options lead the price movement of a stock, the underlying. Futures work a little bit differently because you also get the leverage. So oftentimes, instead of playing stocks, I'm looking to play future in the S&P, which are the ES futures, then to middle with a stock such as Apple or Netflix or something like that. So I get the leverage that I would receive as an option, but I don't have the decaying factor in the complexity of options like a traditional option would provide. One of the other questions I have received as well is using the up volume versus down volume. How can you tell if it is a trending 1 day or a trending 2 day? And the answer to that is that each day is going to be different. You can get a little bit of a bias and maybe follow through from the next day, but the up volume versus down volume is just a piece to the puzzle. So in that training tutorial and training video, I have 4 pieces to the puzzle. I'm looking at the futures, I'm looking at the tick, and I'm looking at the up volume versus down volume, and I'm taking all these in considerations, or taking all this, and each one is telling me something different. One's more sensitive to shorter time, one's more sensitive to the longer term time frame for that day, and it's all telling me one thing, and it's giving me a trend. It's either saying it's a trending day, or it's going to be a sideways day. If the breadth is moving out of yesterday's range, typically the bias is going to be higher or lower in that current day. So the range is going higher, and we get more follow through on the breadth, and we get a higher reading than yesterday. Well, typically that is going to show that we are somewhat in a trending day, and or that the bias is just going to be higher for that day. So each day is going to be different, because at times you can see a gap lower, and then you could see the market move. So I'm going to quickly change my screen, and I'm going to show you a setup with the breadth, and show you just kind of the 1 day and 2 day of an understanding of what the breadth is, and why using the futures will be beneficial. So you can see here, for this time frame that we are currently looking at, which on these charts are a 2 day 5 minute, on the top here, the top left is the up volume versus down volume. The next one over is the advanced versus declining, the tick, and then the futures. The E-mini futures are specifically for this one, the NYSE tick, and this is the data from the exchanges that are relative to the NYSE, which is a majority of the S&P traded stocks. The majority of the S&P 500 stocks are traded on the NYSE, so that's why we're taking data for it and trying and combining that. So if we just look at the up volume versus down volume, you can see that this is really not telling us too much. If we compare this to the futures here, and we look back here, you can see that we had a move lower and we're in negative territory. So the easiest way to look at this is drawing a zero level, and that is where that's where parity lives. We get a move lower, and then you see it kind of base out here. So on this, we're looking at a very negative reading for that day. On looking at just this, then we get a gap higher, and then we kind of fade lower again, and this is where you kind of see it again. We get this little bit of a movement, and then the gap lower here. And let me make sure that I am on the correct dates. This is 11/26. This is 11/26. So the futures acted a little bit odd here on this day, where we did get a move lower. It was negative territory, but if I back this up just a couple days, and I want to back this up to a 15-minute, we are looking at what I'm looking at here is that the session here on the 23rd, we got this move here. So then this is the little bit of a gap lower. We got a pretty decent move here on that Friday, and we got a little bit of move here. So this doesn't really tell you too much. I mean, yes, it's finishing at the lows here, but if we look here at the 26 on these, the advance versus decline lines are actually moving up a little bit. So it's really just an overall chop day. And if we drew the pivot points on here, you could kind of see where all this kind of ties in together, because the pivot points are very critical into this as well, because we're looking at levels where prices are going into, such as point of control, value area. You know, those are things that are essential into trading futures. So when we're looking at this, we're just trying and just, if we use this just as I had talked about, we're just trying to find out the trend of the overall day to see if we can get somewhat of a bias. Sideways days, and if you're looking for stocks to potentially move, you're going to see certain stocks move higher and have stronger moves, while other stocks, a majority of them, are flat. That's typically going to happen on a sideways day. Trending days, you just want to go with the trend. It's either going to go higher or lower. So if we look here, we had a gap lower on this, and if we move this back to a 5-minute, we had a gap lower, which you could see a gap lower here in the futures, but right away the futures saw buying, and you see it here on the advanced decline line. Stocks are advancing. You see here as well that we get a little bit of a gap lower, but then we quickly, after 10 o'clock, start moving into positive territory. Once that occurs, that is a good indication, and then we are able to hold that even when this pulls back, and you can kind of see where this pulls back with the futures as well. You get a move here, pull back, move here, pull back, move here, and it's what you're really looking for. You're just looking, if it's a trending day, you're looking to get on these dips here and take it higher, and you can use patterns as well. But the advanced decline line here was not able to take out yesterday's move, but you could see here on the U-vol versus down-vol, we saw a lot more stocks seeing up volume versus down volume, and that's partially the reason why we had such a strong move off the lows there. And when we look back here, we could see here as the market kind of was hanging around, and then we saw a dip in the overall up volume versus down volume. We could see here that the market closed at the lows that day, with the up volume versus down volume closing at the lows as well. The advanced versus declining did not. But if we looked here at the ticks, we could see a lot more distribution here towards the bottom end of that day than vice versa on today, where we saw most of the distribution above the zero level in positive territory. So going back to the overall question, I'm just using this to gauge the overall market. A lot of people are going to hear about, what the Dow Jones or the S&P closing up, but you have to have it into relative comparison to be able to get anything out of it. So hopefully this answers your question about why I refer to the futures market. The reason why is I'm actively trading it at times. I'm actively trading it, day trading it, because of the leverage that you can receive with an ES future compared to just an option. There's better fills. You don't have the complexity, but I'm also just using the futures market here to help me understand overall market direction, sentiment, and getting into the most likely trade to succeed by having the market behind me as well.